The United States may have just made a trillion-dollar mistake. After Washington forced major banks like JP Morgan and Bank of America to cut ties with Chinese companies, Beijing retaliated hard. In a dramatic financial counterstrike, China dumped a staggering $1.7 trillion worth of U.S. Treasury bonds, sending shockwaves through global markets. The immediate consequences were severe. The dollar plunged by 9%, interest rates spiked, and panicked investors rushed into gold and other non-dollar assets. Now, with America's economic stability on the line, the critical question is, how much worse will this financial war get? The crisis began when the U.S. government blocked JP Morgan and Bank of America from underwriting a $5 billion IPO for CATL, China's largest electric vehicle battery manufacturer. Washington labeled CATL a national security threat, but Beijing saw this as an act of economic warfare. China's response was swift and devastating. In just the second quarter of 2025, it offloaded $1.7 trillion in U.S. Treasury holdings, forcing the U.S. Treasury Department to urgently borrow an additional $514 billion to cover the sudden shortfall. This wasn't just a symbolic move, it was a direct attack on the foundation of U.S. financial power. The ripple effects hit American households almost immediately. With China and other nations reducing their treasury investments, bond yields surged, driving up borrowing costs for mortgages, car loans, and credit cards. Inflation, already a persistent problem, worsened as the weakened dollar made imports more expensive. Foreign investors, spooked by the instability, pulled $317 billion out of U.S. markets in a matter of months. Even former Treasury Secretary Larry Summers warned that these aggressive financial policies risked triggering a full-blown economic decoupling between the U.S. and the rest of the world. But China's strategy goes far beyond short-term market chaos. Beijing is aggressively working to dismantle the dollar's global dominance. It has been stockpiling gold, increasing its reserves to a record 2,292 tons, while also spearheading BRICS Pay, a new payment system designed to bypass the dollar entirely. In early 2025, nearly half of all trade between BRICS nations was conducted in local currencies, a clear sign that the world is slowly moving away from dollar dependency. China is even developing its own credit rating system to reduce reliance on Western agencies like Moody's and S&P, further eroding U.S. financial influence. Now, the U.S. faces an impossible dilemma. If it continues escalating, imposing more tariffs, sanctions, and financial restrictions, it risks accelerating the dollar's decline as more countries seek alternatives. But if it backs down, it could embolden China to expand its economic dominance unchecked. Meanwhile, American corporations like Apple and Tesla are caught in the crossfire, facing higher production costs and disrupted supply chains. The U.S. national debt, already growing by $4 million every minute, becomes even harder to sustain as borrowing costs rise. The stakes couldn't be higher. For decades, the U.S. dollar has been the backbone of global trade and finance. But China's aggressive moves, combined with growing international frustration with U.S. sanctions and financial weaponization, are threatening to end that era. If the trend continues, we could be witnessing the birth of a new financial world order, one where the dollar is no longer king. The question now is, can the U.S. adapt in time, or is this the beginning of an irreversible decline? What do you think? Should the U.S. double down on its financial defenses, or is it time to negotiate before it's too late? Let us know in the comments, and don't forget to like and subscribe for more in-depth analysis on the unfolding economic war.